How's it going? It's been a while, almost 4 weeks now that we haven't communicated with each other here on YouTube. Today's presentation, I wanted to take my time to kind of dive into several elements prior to the holidays. I think it's important that everybody kind of gets to know it. Now, one of the key suggestions of this topic is for us to be effective together, for you guys to listen in, to actually take action, to make the most of this conversation we're going to have today, is that you actually write down some notes, whether it be on a notepad, take a piece of paper, get yourself organized, because we're going to go through several concepts that will actually kind of shift your mindset away from the traditional way of doing things in terms of credit and wealth into the way that I believe is the most beneficial for you, kind of squeezing the time frames and shortcutting your way into kind of grasping and understanding and kind of manipulating your destiny in a sense, right? So the key and the reason for this topic is mainly because I've seen a lot of customers, particularly a lot of people who are kind of like confused as to what direction to go, what to do. It all starts with credit, right? Credit is your livelihood. It's actually the bread and butter of what's going to fuel your wealth. You need it for many, many reasons, right? So I'll give you an example. One of the biggest things that a lot of people can achieve with credit is the ability to have a car, is the ability to buy a home so that they can live in it and kind of host a family and grow up together in that home. There's other reasons. There's also things that, like for example, expenditure, kind of being able to finance something that you can't typically buy with cash, and a series of other things that we know for a fact that we take for granted. Now, that doesn't necessarily mean that you should hunt credit just for the sake of having leverage and using it when you don't need to. All right, so there's two stories of this whole credit concept. The first is that a lot of people kind of use and abuse credit, and then the other one is the real strategic players, right? Like the people who come in, leverage it, they see that there's an opportunity to make some money, lots of it in fact, and they use that to kind of advance, one step at a time to their eventual future, to the thing that they feel is going to be their livelihood. They expand into the person they want to be using credit. That's the fuel. Credit is the fuel. So one of the biggest things that I wanted to share with you guys today, and I think that I want to discuss with you, is understanding the processes that you have to go through when it comes to credit repair. Now, frankly, to be honest with you, there's a reason why I haven't put up so many videos lately. It's because I've been organized. I'm doing a couple of programs for you guys, particularly those who will be learning credit on their own with a lot of additions, right? It's not just the credit, but really being able to take that full circle and use it to their advantage to build their wealth. Because a lot of people talk a big game, they teach you credit and everything else, but it stops there. Because the system is just made so that you can actually get away with it, right? Or else there would be no such thing as credit repair, quite frankly. But on the other side, if those who are reasonably responsible take the time to kind of build those relationships and build wealth for themselves and their families, there's a lot of greater benefit, right? So I'm more interested in serving that community. Now, I'm not saying that those who are taking advantage of the credit system shouldn't learn. Of course, there's a time where you actually have to kind of move ahead with your life, right? Because at the end of the day, if you have a family, if you have to take care of your spouse or your husband or wife, or let's say your future, you have to think about yourself. So regardless of which category of people you fall into, it's always going to be a full circle. It's going to catch up to you, and you're going to have to make the eventual decision on whether or not to take full responsibility for it or to live below your means when in fact you're capable of so much more. So in this topic, I wanted to really dive into those concepts. Now, the first thing we're going to talk about is understanding processes, right? So we're going to talk about 4 things today. We're going to talk about first, understanding processes for credit. We're going to talk about creating a commitment calendar. Now, a lot of people will not understand what this concept is. A commitment calendar is something that you put down on a piece of paper or a notebook or a journal, and you stick to your timelines. Now, you have to be realistic with yourself for this to work. But a lot of people kind of, go into certain things and they make unrealistic goals, and then they expect to, kind of achieve those goals without really understanding whether or not they can actually achieve it, right? So there's a lot of different moving pieces and components, but we're going to talk about the commitment calendar as a second thing for our discussion today. The third we're going to talk about is the importance of creating cash flow, right? A lot of people get into the game of real estate. They get into wholesaling, they get into fix and flips, and eventually settling down with multifamily units and becoming an investor and collecting the cash from the rent, right? But there's a whole different ball game to cash flow that a lot of people kind of miss. right? So it's important to restructure your debt, to restructure your scenario, your credit, to free up the equity that can actually deliver the cash to you. We're going to talk a little bit about that. And the final thing we're going to talk about, and I think it's the key here of all this discussion today that we're having, is the idea of leveraging everything that you have on a personal side with your credit, with your ability to extend yourself and leverage yourself to the point where you can actually go out there and work with joint venture partners, work with other people who are like-minded, right? People who actually take responsibility, and working as a group to attract the bigger fish. Because sometimes when you're alone and there's way too much noise, right? You're trying to do a huge deal. You want to, create more wealth for yourself. You want to kind of rapidly accelerate. You want to do shortcuts. And you kind of go out on your own because, number one, you probably trust a lot of people and they kind of disappointed you over time. Or number two, you're on your own. You may be the best person you possibly can, but there's way too much noise for any investor or somebody significant to notice you. So that's why it's important to work with groups, the consortium of power, right? So there's a reason there's a whiteboard. We're going to actually break it down, everything we're talking about today, right? So the first step, okay, we're going to talk about is the processes, right? So today, our first step is going to be processes. Now, a lot of people ask me, how does credit repair work efficiently? What do we do to make it work so that I don't have to worry about whether or not it's going to work? I don't have to worry about whether or not I have to go after somebody else, to hire somebody else to do it for me, or actually have to go and dig deep and learn it on my own, and now I'm stuck. So one of the biggest things is to understand that there has to be processes. If you don't work with processes, if you don't work with procedures, on a personal level, you're not going to be successful in credit, particularly credit repair journey, right? And restoration, enhancement, and all the other things that follow through. Now, what do I mean by process, right? One of the biggest things is if a lot of people tell you that there's shortcuts, right? You're going to hear these 30 to 45 days complete credit repair, right? Then other times you're going to hear like, hey, I can do this in 3 weeks, right? So you got a lot of people that said they can do it in 3 weeks. Some of them will tell you, hey, I can do it in 90 days. Give me a chance and I'll do it in 90 days, right? So which one of these is the right one? How do you determine which one of these is the right one? And the truth is, nobody can guarantee you a timeline. Because in credit, when you're actually working on your personal file, when you're trying to achieve a greater level of success for yourself, and you got a lot of things that you got to take care of in your personal credit file, these alone is not enough. For example, the method that I teach, that we have in one of my videos, we talked about the PI minimizer technique, which is your personal identifiers, the item anchoring, which is anchoring those identifiers to the negative items, and then eventually disputing it through the Consumer Financial Protection Bureau. Just that alone possibly will take you 60 days. Because keep in mind, you have to take care of your personal identifiers, right? So you have to take care of your personal identifiers. So how can you do everything in 30 to 45 days? Now, it is possible. A lot of people will go ahead and do it. There are systems in place that actually do it. But what ends up happening is there's a possibility also that they're going to come back. There's a possibility that some items get re-verified. Now, a lot of people say negative items can fall off. They'll stay off. One of the things that you have to keep in mind, especially when it comes to Metric 2 compliance, which is the credit reporting standard, when the furnishers, where the people putting information in the credit report, communicate with the credit reporting agencies through the e-Oscar platform. If they're active accounts, which meaning like, if they're actually open still and they're not charged off yet and they have a negative status or even a collection status, they can report every month. They have a batch of clients that they do a batch processing is what we call it, and then they report at the bureaus. You remove it this month, chances are 60 to 90 days they can come back, depending on the date of those batch processing, right? So there's a lot of different techniques that you guys have to understand. And I think that the most important critical component is never rely on specific timelines. There's a range that you have to work with. Give yourself 60 days, sure, but expect anywhere between 120 to 180 days, which is like, 5 to 6 months. The reason why I say that, and the reason I need you to pay attention to this, is because if you don't give yourself enough time and you come in with unreasonable expectations without any processes, what's going to happen is you're going to fail in credit. Now, a lot of people may get the most significant results using Section 609 or other means within a few weeks or 2 to 3 months, but if you want permanent results, if you want something to kind of last at a very long time that actually creates a meaningful impact to your credit report, then expect 120 to 180 days. That's something reasonable, right? It's not like rushing it. It's like coming in with a process. It's like understanding, hey, it's going to take me 5 to 6 months. I have to start with that process in mind. And when I have that process in mind, I'm expecting something reasonable. Now, if somebody does a great job in a very short period of time, that's great, you shortcut. But never, ever expect yourself to get anything in a very short period of time. Even though they tell you, and even though there may be testimonies and all these great stuff, you have to understand for yourself that what I just explained, if there are active accounts that are kind of batching, customers together and reporting on a monthly basis based on the reporting dates, that can significantly and adversely affect you. What are you going to do? You're going to go back and pay again? So you're going to have to understand that there are, certain things that you have to pay attention to. Now, with that said, we talked about batch processing. Excuse me. So we talked about batch processing. The next thing we're going to have to talk about is the accounts. What kind of accounts we're going to be looking into, what we should pay attention to those accounts, and what's important. So the first thing we're going to do is we're going to talk about accounts, right? So accounts, there are two types of accounts, right? Now, a lot of people say, well, there's negative and positive. Wrong. There's two types of accounts. There are active and there are inactive accounts. Man, my handwriting is really bad today. Right? So there's active and then there's inactive accounts. Now, what do I mean by that? So active accounts are essentially what I just explained to you. Whether it be positive or negative, there's an ongoing monthly reporting that's happening because that account is either not charged off yet, or there's certain things that are like, because it ties to you and your financial activity, they're just continuously reporting. There's also positive accounts, which is like credit cards and line of credit accounts that you borrow from and you make your monthly payments, and then they report. So there are certain things like that that you have to pay attention to. Now, that's a process too. So when you're looking at your credit reports, you have to identify which one's an active, which one's an inactive account. The reason I tell you this is because when you're doing credit and you're working on your file and you're actually fixing it for a greater purpose, one of the biggest things that you have to pay attention to is which category of these accounts are you going to be taking care of? Are you taking care of active accounts? The chances are they're going to report again. A lot of people make the mistake of removing positive accounts by accident, and then they're afraid, oh my God, I don't have that positive history. Thankfully, if it's an open active account and you're paying monthly, right? Like for example, a car loan, for instance, right? It may report back. Now, I'm not saying that it's not going to. I'm saying it may report back in the next 30, 60, or even 90 days. You got to give it some time. And you can always pick up the phone and call them and say, look, I don't see this account anymore. It was there before. Chances are they're going to go ahead and update it for you anyways. But if it's an inactive account and it's a positive account, so for example, let's say if you have a Capital One card that's like $20,000 limit you had, it's been closed because you don't use it, but you have that payment history and the account history, and all of a sudden it's gone. The challenge is that you have to actually now call them and go through a whole series of processes to get them back on your report. Because these bad boys, they don't have your ongoing activity. You're not paying monthly bills to them. So that's another key component that you got to understand when it comes to processes. So again, just to review, we talked about the timelines and we talked about the different types of accounts, which are the active accounts and the inactive accounts. So that's the thing that I want you guys to understand when it comes to processes. A lot of people think that, hey, I can just go out there and just dispute all my negative items and I'll be okay. The problem is, a lot of people had, and this is a true testament to the way the industry works, is a lot of these negative items keep coming back because they're not closed yet, they're not discharged, and they're not written off from the books or the asset value of those collection agencies and or other companies, right? So just pay attention to that, and once it comes to that, the timelines and the type of accounts that you have, everything else becomes clear, right? Everything else is like, okay, well, what do I need to do? Is this active? Is this inactive? How do I determine that? Like we just discussed, right? Now, what's my timeline? Right? So don't ever get into the process of credit. And another thing I want to tell you is part of the process is, I think that a lot of people kind of misread, and I think that it's important that I got to explain that to you, is never get into credit repair if you're in this situation. Okay? If you're in an urgent situation. I don't know if you guys can read that or whatever it is, right? But if you're in an urgent situation, I don't advise you to get into credit repair, because what's going to happen is you're going to have emotional attachment and you're going to make irrational decisions and you're going to be rushing to do something. You're going to be spending a lot more trying to get the best results possible. Where in technicality, if you're patient, if you guys understand the process, and if you really take your time to do it right, you won't fail. So what do I mean by urgent? I'll give you some examples. So there are situations where customers come to me and say, look, I got to fix my credit. I have 60 days. I got to get out of this house. What do I do? Right? Or, you know, I got a couple of situations like where customers say, my business is almost finished. I got to pay my payroll next week. I got to fix my credit. Right? Situations like that is like mission critical. Nobody in the right mind, not even the CEO of Experian, can help you in that situation. You have to be very careful. Most of the times, credit repair is the right time when you actually have a plan in mind, which we're going to talk about. We're going to talk about the commitment calendar. But you have to be very, how do we say this, careful with when you're actually starting the process. Don't do it when it's urgent, because what's going to happen is you're going to rush that individual. You're going to make irrational decisions. You won't even be seeing if somebody's trying to take advantage of you or not. You're going to be spending a lot more money without possible results, right? So never do credit repair when you have an urgent situation. That I would strongly advise you against. Okay, so that's done. So that was it. Just to recap, the processes involve timelines, making sure that you're gonna have a reasonable expectation for yourself between 120 to 180 days. You have the type of accounts, which are the active and inactive. We talked a little bit about that. Well, we also talked about when to start your process, and you should never do it when you're in urgent or dire need, because that's actually going to hurt you more than it's going to do you good. Okay, because you will make irrational emotional decisions and end up spending more because you're in such an urgency. You're trying to get the results as fast as possible. You do anything to make it happen. So that's something that you got to stay away from. Our second topic today is the commitment calendar. Now, commitment calendar, what it is essentially, it's for yourself, right? So you journal that and you write it down. And what you do is you actually start a process where you're going to actually, go out there and create a process where you'll be able to follow follow a commitment process, right? A commitment calendar is something that everybody needs in their timelines when it comes to credit repair. And of course, when it comes to building wealth. Now, you should have in mind the schedule we talked about, which is 120 to 180 days. Your credit is just restored. Okay? And this is your starting point. So you start here and you come here. Now, your starting point to 120 to 180 days is basically the commitment calendar. What that means is you're going to be, working in between. So let's say 30 days from now, items are removed. 60 days from now, items are removed. 90 days from now, items are removed. And, you start going through that route and process. And what happens eventually is you reach a certain point. Now, when I say restored, we didn't even talk about enhancement yet. We just talked about, some of the things that you'll be doing just to get to the point where your credit report looks ready for enhancement. Enhancement is another step, right? So enhancement is reverse. So we're going to start here. And we're going to do here for another 120 to 180 days. That's enhancement. So this is called enhancement. Now, what does that mean, enhancement? You just finished your credit report, you cleaned it up. What's up? What do we have to do now? So if you look at this whole structure and calendar, it's almost 365 days. Almost, but expected. So it's almost 1 year. This whole thing can take up to 1 year. Now, a lot of you will be scared. You'll say, well, what do I do? I can't wait a year to fix my credit. I have to get a home. I have to, get into investment real estate. I have to do a lot of things. Now, keep in mind, we're not talking about, when you should start looking for homes or you have to wait a whole year to do it. No, I'm saying by the time you're restored, chances are you have some good credit history already. You can just leverage that and acquire a mortgage or a property, or let's say if you want to do some car financing, you should have some decent credit by that. But the reason why it's important for us to stick to a commitment calendar for enhancement purposes of your credit report is because this allows you to go from owning one home to owning 5 to 10 homes, right? This allows you from owning, let's say, a small car that you could barely afford because you don't have enough enhancement, to waiting a few months, to driving your dream car for less than what you would have paid for a not so good car, right? So enhancement is very critical. A lot of people miss this by a big shot. The reason why they miss it is because they think that enhancement is not a necessary part of credit. It's not a necessary part of their journey. That's wrong. You need to enhance. After you fix your credit, after you restore your report, if you don't take the time to enhance your report, what's going to end up happening is you're going to have a huge disadvantage compared to other people who are taking the time to enhance their credit reports. And that, what I mean by that is, our third topic is going to be cash flow. Creating cash flow for yourself. Even if it's $100 a month, it adds up, right? And if you do this several times, in the 5 to 10 year period, you're building a nest egg that's big enough that'll sustain you and your family, because you'll have significant equity built over time. And I'm talking about investment real estate. Now, enhancement will allow you to do that without question. But if you don't do it the right way, if you don't enhance it the right way, you're going to be missing a lot of huge opportunities. Now, most of you guys looking at this video will ask yourself, what are some of the ways that I can enhance my report? Ali, you talked about credit repair, how to fix it, how to remove the negative items, but what's the deal with enhancement? How do I go about enhancing my report? And the key to that, a lot of people will say add some primary trade lines, season primary trade lines, all that good stuff. That's fine. Okay, listen, I'm not an advocate of those type of situations. You guys clearly know I've been saying a lot of things, and no, I get some people who don't like what I say. That's okay. I don't care about that. I care about making sure that those who are actually listening to my advice take it to heart and get some outcome. That's what I'm doing this for. Now, when it comes to enhancement of your credit reports, you have to think about two things. Number one, when you're enhancing your report, what are you doing that's going to make it easier for you to go out there and ask for more of the same person that you're building a relationship with? What I mean by that is, let's assume you start an account at a secured credit card with a credit union. And after a year, or let's say 6 months, you ask them, hey, can I borrow unsecured credit? Chances are they'll give you possibly more than what you would have asked if you had decent credit without adding any assets to their balance sheet. And what I mean by that is, a lot of people talk about the new ultra FICO model, right? Where they'll consider your banking records, your deposit history, the amount of times you open and close the bank account. All these type of situations add up to a greater financial responsibility and greater financial connection with those banks or institutions that you're building your ongoing working relationship with or transactional relationship with, right? So think about when it comes to enhancement is how you can work with financial institutions or creditors to add assets to their balance sheet. Usually it's a cash deposit, even if it's 20%, 30%, 40%, up to 80%, even 100%. Work with that, even if it's small, time to time, budget yourself. Do at least 3 to 5 of these a year. And what ends up happening is you'll have a lot more credit down the road because now you're in a position to ask, right? You're not going to be afraid because the worst thing that's going to happen is they'll probably give you 2 to 3 times of your secured deposit amount. And that's not bad because what it does is it already has your positive payment history, but now you're enhancing it in such a way that actually looks good, even when considering the ultra FICO model, right? Because now you're making deposits, your bank records look good, you're building ongoing relationships, the amount of new accounts being opened with positive deposit amounts, and no subtraction of money is looking positive for you. So that works in your favor. So consider that process as part of your commitment calendar. Make it so that after you fix your credit, after you've restored it completely, that you take your time to note down what are some of the relationships that you're going to be building. Which are the financial institutions that's close by community credit unions and or credit unions in general that you feel that you can go with to build those relationships with, as well as the major financial institutions also. Because those guys, they control a lot of banking system. They control quite a lot of variety of products and services that I believe will become a great value to you in the eventuality. So learn to make a habit when you're looking at restoring your credit and fixing it, to start with the process of restoring your report. And then the next step is worry about the enhancement process. And we just discussed it. We talked about trade lines, but there are some free ones out there. You guys know this. My Jewelers Club, Self Lender's amazing. New Coast Direct, Hutton Chase. A lot of people will do Ox Publishing. I'm not going to bash anybody here, but if it's just doing one credit report, you can do that with the furniture that you actually need at your house or your lodging instead of just wasting money on things that you don't need. So think about the ways that you can actually benefit from while getting access to those trade lines, because that's important, right? You can't just be throwing money away. So consider that element. So once you add those big, bad boys, the next step is to enhance it. Go to those financial institutions, your credit unions, the major creditors, make some deposits, minimum $400 to $500, and learn to build those relationships. Sit down with some branch managers, create a CD package, which is like a credit disability and critical illness, type of insurance products that's like acts like a savings, but anything happens, they pay out. Look at life insurance policies. I'm not a licensed insurance agent. I'm just giving you a heads up in terms of some of the things that'll enhance your wealth, right? Some of the things that'll make you whole, right? So insurance is a great way of leveraging, down the road. If you have enough, you can use that as a collateral to finance a lot of different things. A lot of people don't know this, but there are specialty companies that actually provide financing against your insurance policy. So there's a lot of different ways to go ahead and enhance your credit report. And I think that the biggest thing is learn to create a commitment calendar every year, not just once, every year, to build those bankable relationships. Because what's going to happen is you'll have a habit and mindset all of a sudden of, hey, how do I enhance my report? How do I make it better? How do I benefit both the institution and myself so that I can leverage? How do they become partner in a multifamily that I'm going to be buying? And all these type of situations. Now what's going to happen is you'll have endorsements. You go to investors, your banks can act as your reference. All these type of things is incredible. It's a good thing to have. On the other side, you're going to be running from how many creditors because you want to bury those negatives behind your report. Not a good thing to do, right? So think about that. Think about that commitment calendar as I just described. And it's something that I want you to pay close attention to and really take to heart, because if you guys don't do this, nobody's going to do it for you. So, you got to do it, and you got to make sure that you do it right. That's why I wanted to give you guys a heads up on that. The third topic, which we don't necessarily have to put on the board, I'll just write it out for you guys, is learn to create cash flow, right? Because cash flow is king, right? Credit is queen. So those two work together well. Now, even if it's $100 a month, right? Let's say if you have a $10,000 and you want to use that as a down payment, and you look for areas in real estate, maybe outside of your own home or region, that's cheaper but has significant cash flow, and you learn to invest in those real estate assets. Or you work with a group of team and partners or like-minded individuals who have $10,000 each, and let's say there's 5 of you, now it's $50,000. Now you can actually afford a scenario where you can actually go in and do a larger down payment for a larger property. Now, always keep in mind, right, the cash flow is not based on the entire value of the property. It's based on how much cash you put in. So if you put in, let's say 50 grand, right, and that's your deposit combined, and the property, let's say, is worth 200 grand, right? This is what's going to be your cash composite. This is what you're going to be looking at in terms of cash flow. How much is it generating? How much dollars is it making every month from the 50,000? And you're going to see in most typical scenarios, you're going to have between 15%, sometimes even 20% returns based on a $50,000 deposit. You continue maintaining and you continue building your cash composite, which is a variety of ways to make your cash flow increase. Properties and real estate is one way, but another way is making sure that you get decent credit and refinancing some of the old debts that you have, and making sure that you kind of lower your monthly bill, because that's going to increase your cash. That's going to increase your cash composite. It means that that's more pocket money in your pocket, right? So some of the things that I wanted to kind of describe was all in this video. It's kind of long. It's about 30 minutes, but at the end of the day, guys, like, credit is about you, right? It's not about how fancy or what kind of black card you have, or what kind of accounts you can open, or how good the relationships that you feel are going to be when it comes to having like all these fancy things, right? It's not about that. Credit is all about you at the end. What's your goal, right? Is your goal to enhance your lifestyle because you feel that you want to take care of your family better than you are now? Is your goal to becoming wealthy and creating a lot of cash flow and creating assets? Is your goal to have banks give references for you instead of people that investors will feel confident about to do business with you, right? So think about that. Think about that because it's very important. Down the road, once you guys get to experience some of the videos that I teach, the knowledge that you gain from my videos, I'm going to start talking about how to leverage as a group, come together, put some down payment, and have big investors participate in transactions where you can rub shoulders and shake hands with them. Now that's the ultimate goal for a lot of people in real estate, right? Who are getting access to real estate, who are getting into the educational component of real estate. But in order for you to do that, right, credibility has to be there. So you have to really take this seriously, because credit at the end of the day is to be leveraged to build your wealth. Now, if you're part of my newsletter, which I encourage you to sign up below, I use a credo at the end of my newsletters. At the end of it, I say that credit is to build wealth. There's 3 steps to it. And I think that the biggest thing a lot of people will gain from credit is the ability to do business like they've never done before, is the ability to touch and go beyond the boundaries that they're used to go out the comfort zone, to feel the growing pain, so that ultimately the families that you have to take care of, especially yourself, you get the best benefit for. All right, so with that said and done, if you're new to this channel and this is your first time watching my video, don't forget to subscribe, turn that bell icon on, so every time there's a brand new video like this, you'll be first to be notified. Don't forget to subscribe to my newsletter. It's very important because now I know how these things work. You know, a lot of people spam and all that good stuff, but I'm all about value. So I'll be teaching a lot of stuff, even in my newsletters. And of course, if you found this video to be helpful, feel free to share with your friends, family, colleagues, or associates. And give me a thumbs up if you like this video. And below this video, tell me what you're going to be working on first. You know, are you going to be working on enhancing, fixing your credit, creating a commitment calendar? Or are you looking to decrease your, your debts and saving yourself some cash at the end of the month, so it's money back in your pocket, so that you can create more cash flow? So whatever it is, let me know. Share the thoughts and feedback below this video. And again, this is your guide and mentor, Ali Tarafdar. I look forward to seeing you guys next time. Bye for now.